You're listening to Seven Horns AI, your AI-powered market update. It's Friday, June 5th, 2026, and we're here with your market wrap-up after today's trading session. U.S. stocks closed sharply lower today, marking the worst single session since October for the S&P 500 and snapping its impressive 9-week winning streak. The S&P 500 declined 2.63%, closing at 7,383. The tech-heavy Nasdaq Composite saw an even steeper decline, falling 4.18% to 25,709. The Dow Jones Industrial Average also finished in the red, down 1.35%, closing at 50,866. The market opened under pressure, with selling accelerating after the release of a stronger-than-expected May jobs report. The economy added 172,000 jobs, significantly more than the 80 to 85,000 expected. This good news is bad news scenario fueled concerns that the Federal Reserve would keep interest rates higher for longer. Bond yields surged, with the 10-year Treasury yield topping 4.5% and the 30-year yield breaching 5%. The Dow actually hit a fresh all-time intraday high early on before reversing course. By midday, the S&P was down about 2%, and selling pressure intensified into the afternoon. The Philadelphia Semiconductor Index tumbled over 10%, making it the epicenter of today's rout. Looking at futures after the bell, S&P 500 futures are off about 0.3%. Nasdaq futures are down 0.2%, and Dow futures are also off 0.2%. These moves are not considered meaningful post-close drift, suggesting the market has largely settled at today's closing levels. Among the megacaps, all 7 finished lower. Tesla saw the steepest decline, down 6.56%, followed by Nvidia, which fell 6.20%. Meta Platforms was also hit hard, dropping 5.51%. Amazon declined 3.06%, and Microsoft was down 2.66%. Apple held up relatively well, down 1.25%, as did Alphabet, which was off 0.98%. No significant after-hours reversals are noted for this group. Beyond the megacaps, Poet tumbled 23.36%, and Navitas Semiconductor dropped 18.23%. However, Marvell Technology, which was down 16.74% during regular trading, saw a notable 6.08% bounce in after-hours trading. On the defensive side, Coca-Cola gained 3.46%, and McDonald's rose 2.61% as investors rotated into consumer staples. Today's sharp pullback on Wall Street, with the S&P 500 down over 2.5%, sets a challenging tone for upcoming Asian markets. Asian markets themselves closed lower in their previous session, with Japan's EWJ exchange-traded fund down 3.62% and China's FX1 down 2.03%. Nikkei June futures are essentially flat into the evening, and Hang Seng June futures are showing continued softness, down about 1.1% after their close. This combination of significant declines in both the prior Asian session and today's U.S. market points to a cautious open for Tokyo and Hong Kong. The key themes driving today's action were the return of the good news is bad news narrative, with a strong jobs report increasing Fed rate hike expectations. This triggered a semiconductor wreck, which started with Broadcom's earnings miss yesterday and cascaded across the entire chip sector. We also saw a clear defensive rotation into consumer staples like Coca-Cola and McDonald's. Looking ahead to Monday, markets will continue to watch Fed rate hike expectations, the performance of semiconductors and mega-cap AI technology stocks, and upcoming earnings from companies like Oracle, Adobe, FedEx, Micron Technology, and Nike. Labor market and inflation releases will remain the top macro catalysts in the weeks to come. That's your market wrap for today. This has been a Seven Horns AI production. For more insights, visit us at sevenhorns.ai. We'll be back on Monday for the next market update.